SMT Divergence. So in this video I'm gonna show you what an SMT is, how to spot it on the chart, and how to make use of it. What does SMT stand for? I don't know, right? I just know it is a confluence that can be used so that you know what to do when it appears, right? So an SMT divergence is when two correlating index start to not correlate, right? Meaning in this case I use Nasdaq and ES, so the charts are the same. However, sometimes you'll find that Nasdaq is moving to the upside way quicker than ES, right? Or vice versa. That's when we say now we have an SMT. So let's go into the chart and I'm gonna do some drawings and show you how you can see an SMT divergence, right? So let's do this. So we're gonna put this rectangle here so I can explain it properly, right? So okay, so let's say the top one is ES and then the bottom one is Nasdaq, right? And then we have something like this. The graphs are moving this way. So we have something like this. It comes down. This is ES and it pushes up, right? And it comes down, pushes up, comes down, right? And then on Nasdaq, let's say this happens, come down, we push down below this, right? Then we push up to this level, then we do the same, right? Technically this movement or this market structure looks the same. It is the same thing, right? However, on one index, on ES actually, you can see that when we move up, we push way quicker compared to Nasdaq, right? And then same goes when we move down on Nasdaq, we dump way quicker than on ES, right? Now this is an SMT. Where are we having our SMT? For Nasdaq, it's down here, right? This is what we call a bearish SMT. And then for ES, it will be up here. This is what we call a bullish SMT, because this point and this point, they are the same. They are occurring at the same time frame, right? However, the only difference is that this one is above, is below this high here, but then this one is above this high, you see. So that's how you spot an SMT, and that's what it is, right? And then how can you make use of this? Okay, we'll cover that one afterwards, but then let me show you on the chart real life examples of this, right? So let me go, this is Nasdaq, right? And then this is ES. We are both on M1. Now let's look at let's see. Okay, this was 21.59 there. So you see, let me mark using this rectangle. Okay, so you see from that high to, how can I put this? Okay, let me mark this whole movement, and then the same thing this side, right? From that high to down to all the way down there, right? You can see the difference, right? You can see that on ES we came all the way down, right? And then we pushed up, then we started putting in some structure there, right? And then if we go to Nasdaq, what did we do? We came down, we pushed up, then we came down. So on ES, we started putting some structure starting from up here, right? But then on Nasdaq, on the other hand, we did that below here or down here, right? Same movement. If you look here, we have down, up, down, up, down, up, down. If we come to ES, you will see that we have the same movement. So however, on ES it started up here, right? Why? Because this candlestick, this one, didn't come all the way down here, whereas on Nasdaq it came all the way down here. You see this one, you see it, meaning now what does this mean? Nasdaq is leading to the downside, meaning we have a bearish SMT on Nasdaq, right? However, if we go to ES, what do we have? A bullish SMT, right? Because this candlestick didn't come all the way down here, and this structure is a bit up. So let me mark only this structure so perhaps you can see it. So this structure from down there, you see we have this gap here on ES, and then on Nasdaq we don't have any gap down here, you see, but then this is the same thing. So that's what an SMT divergence is. Now, how do you make use of this, right? Let's go back to our initial drawing, that one up there. Now, an SMT can be used in two ways actually, that I know of. So one is you can take a trade out of an SMT, right? Or you can use it as an indicator to know which index to trade. Okay, so let's say for example you're looking for short positions, right? All your confluences are met, and then the market is showing you that you can actually take shorts. So you're simply waiting for that one confirmation for you to take a trade, right? Meaning on M1. So if you get a bearish SMT, meaning you find a structure similar to this on M1, you can actually take the trade, right? Meaning you will short this down here, right? Because at this point, at that point, you have a bearish SMT, you see. And then another way is using knowing which index to trade. So if you're looking for shorts and then you can see this. Let me even write this for you so it become a bit more professional. This is ES, right? That is the contract, and this is NQ1, so right, let's make that blue perhaps. There we go, it looks nice now. Yes, less confusing. Now let's say all your confluences are met and you were looking for longs, right? All your confluences are met, so you look only left with one confluence for you to enter a position or to open a position, right? So what are you gonna do? You're gonna check before you enter that position. Let's say you're waiting for a break of structure to the upside. Now if let's see, where's the brush? So let's say you're waiting for, maybe price came, then you're waiting for a break of structure up, right? This will be, okay, let me not confuse you, let's do this. Break of structure down, let's say it started somewhere here, right? This is our break of structure down, then you're simply waiting for a break of structure up, and then boom, on ES you get that. But then if you come to on Nasdaq, this is how it looks like, right? Then you get your break of structure up there, right? Now, which index are you gonna trade? Are you gonna take your long positions on? ES, obviously. Why? Because it is leading to the upside. You can see it pushed all the way up to above this horizontal dotted lines. We can use that also, right? These horizontal dotted lines. So it pushed above that horizontal dotted line. However, Nasdaq, on the other hand, it did break structure, but it didn't push above the horizontal dotted lines, right? What this means is you will take the long position on ES. You will take it this side, right? And not here. Why? Because one, if you take it on the lagging index, meaning on Nasdaq, let's say you take this long here on Nasdaq, right? If the indexes decide to make some form of retracement, your stop loss is gonna be hit quicker because you are trading on the lagging index. However, if you're trading on ES, your stop loss won't be hit very fast. Why? Because it is leading to the upside, meaning for it to go down, it is slow and lagging. It is lagging going downwards, right? But then going upwards, it is very quick, right? Same goes for NQ. So that's one reason why you should take trades out of, you should use an SMT to know which index to take trades out of, because again on ES you'll hit your take profit way faster than you would on Nasdaq in this case. Why? Because it is leading upwards, meaning it is moving fast to your take profit, right? And then on on Nasdaq, for example, if Nasdaq pushes, let's say, up to here, right, and then we make a retracement on ES, you might find that at the point that Nasdaq is making a retracement, your take profit would have been hit up here, right? Then we make our retracement. I'm gonna show you real life or chart examples of this. Actually, let's go ahead and do that. So let's see. Let's look for perhaps here, right? Let's say you're targeting that high as your take profit, okay? Now, if you're targeting that high as your take profit, you see on Nasdaq we already hit your TP. You might find that on ES that's not the case. Okay, in this one it is the case. We did hit, wait, is it the same time? Let's see, 1416. Okay, let's see here. 1433. I'm trying to find an example for you, like a good example. 1433. Okay, this one won't be. Let's try to find another one. See, on this one, 134. We remove. There we go. So you see we have a breakout structure down here on ES, and on Nasdaq our breakout structure is up there, you see. So in this case, what does this mean? ES is leading to the downside, right? Because you can clearly see, look at this candlestick here, right, at 135. Look at this one here at 135 again. Do you see we have like some good bearish candlesticks from that breakout structure down? However, on Nasdaq we don't have as good bearish candlesticks as these ones, right? So what does this mean? It means that if you are gonna take shorts in this case, okay, let's say you took shorts down there on the break, stop loss up there, perhaps your take profit would have been down here, right? We can do the same for NQ if we, yes, and so that we can see which one is gonna hit our take profit first. So stops down here, TP up there, down there. Okay, so let's go to ES since it is the one leading downwards. So I'm gonna do 3x so that we can get there quicker. Okay, pause. So we hit our stop loss, I mean take profit at 143 here, you see. Let's see if we did the same on Nasdaq. See what I'm talking about? So on ES our take profit has been hit. On Nasdaq, not yet. Why? Because Nasdaq is lagging, ES is leading downwards, right? So we use an SMT divergence to know which index to take the trades on. In this case, we're going to take the trades on ES so that we can hit our take profit fast, right? Instead of Nasdaq, because you see on Nasdaq you would have been in the trade still waiting for your TP to be hit down here, whereas on ES we already hit our TP. And guess what can happen while you are waiting for your TP to be hit on Nasdaq? Price can reverse and go for your stop loss, right? So we need to be smart about it. Now, if you trade in forex currencies or commodities, I don't know which commodities or currency pairs are correlating this in the same way as ES and Nasdaq are doing, right? So you're gonna perhaps do some research on that and find that out by yourself. But then that's how you use an SMT to know which index to take trades out of, right? So let me find an example whereby you can use an SMT to enter a position. Okay, so that one explained. You're gonna have to find real life examples for yourself so you can test it out. So let's see if you find any good examples for this one, for using an SMT to enter a position, right? So there's a few that I remember, but then I don't know which day it was. Okay, let's see here. Let's do this. This is a 1 minute time frame, by the way, so simply using this for explanations. Can we have 28, 30 there? That's 30, that's 28. Okay, so let's see. We do have one, but then it is not as good looking as what I'm looking for. So you see, this is an SMT again. This is 1500, this is 1530. If you go this side again, you'll see that I marked the same points. This is 1500, this is 1530. How do I know the time? Look down here, you'll see, right, 1530 down there. So this is an SMT. Now once we have an SMT, right, and a break of structure down here, you can actually take trades on open position on the leading index, meaning you see in this case it was down here. So when we have something like this and all your confluences are met again, right, because you can't just blindly take trades out of an SMT, because there are SMTs everywhere. So once all your confluences have been met, and then you're simply looking for that one entry confirmation, you can use an SMT for it, right? So in this case, let's say all your confluences have been met, then you see that we put up an SMT up there, right? Stops would have been up there. Why am I taking the short on Nasdaq? Because it is the one leading down, right? And then we just broke structure to the downside, you see. So if we were looking for longs, we're gonna take them on ES. Why? Because here is the dotted lines. They show you that, okay, this one is leading up, that one is leading down. So let's say you're taking them on ES, right? And then where do you put, let's say you're targeting this low down here, or this draw on liquidity down here, right, of F15. All right, I'm gonna do the same for ES so that you can see again that it's always best to take the trade on the leading index for whatever kind of trade you are taking, you see. So look at, and we'll see how it was at 05 something, this low here. Again, this can go in, it could decide to not go our way, right? However, if you see here, what is this, 1531 on Nasdaq, our 1531 candlestick is already in profit, you see. So let's see which one is gonna hit our TP first. Okay, so hit our TP there. Okay, so let's see, it was 1540, then this side, lovely, even this side it was hit, you see. So now what do we notice? The only difference is that when this one retraced, it went all the way up to our entry point, right, or our entry price. However, this side, when we retraced, we didn't even come close to our entry price, right? But then the take profits were both hit at the same time on this one. But now you tell me, which one do you think it would be best for you to take the trade on? Again, this one, the risk to reward was 1:96, and then this one it was, I'm not sure if it looked as good. This one it was 1:2.4, I mean 0.24, right? 1:2.24, and the other one we have 1:96. Now which one would you take the trade out of? this one with the low RR or that one with the huge RR. Again, this one which is not leading down or the one that is leading down. Alright, so now that's it for the SMT divergence video. That's what it is. That's how you spot it on the chart, and that's how you can take trade out of it and how you can use it to determine which index to take the trade on. Right, so that's it. Thank you for watching the video, and I'll see you on to the next one. Cheers.